Live now to James Smith. He's developed markets economist at ING. So, James, you heard there Governor Andrew Bailey saying it is way too soon to start talking about cutting rates. What's your view?
Yeah, they really don't want us to be talking about rate cuts. Markets are obviously starting to price them in. We've got about 2 rate cuts priced for the second half of next year. I mean, look, I think at the moment, central banks obviously got burnt forecasting inflation on the way up. You know, they missed the big rise in inflation, as did many economists and other central banks around the world. And I think what they're really worried about doing or cautious about doing is sounding the all clear too soon. I think they're saying there's better news on inflation, particularly if you look at some of the survey data that the Bank of England collects and looks at. But listen, I think by the middle of next year, we'll see a few things. We'll see core inflation will be back down below 3%. It's currently up above 6%. And I think also the Bank of England itself acknowledges that a lot of the impact of past rate hikes is still coming through. The vast majority of mortgages in the UK are fixed, but they're not fixed for very long. A lot of homeowners are refinancing over the coming year. So that's going to act as a growing drag on economic activity and probably also inflation as well. So our own view is that we're going to get the first rate cut from the middle of next year.
OK, so cuts are coming, perhaps. I want your take on the factors that are driving inflation, though. 6.7% is the level. It is, 3 times BOE target. So how do they address that moving forward? And what are these factors that are driving persistently high inflation in the UK?
Well, some of the things that have been driving inflation are getting better. Energy prices was obviously the big thing a year ago, and gas prices, as we know, have come a lot lower, and that is starting to feed through. Energy is actually now a drag on overall inflation. Food prices as well, they were earlier this year the big driver of inflation. Those two or inflation is slowing very quickly there as well. I mean, Governor Bailey mentioned in the clip he just showed, it's services inflation that they're really watching. That's the most persistent bit of the inflation basket. It's the bit that monetary policy has the biggest control over. Now, that's the bit that's proving most sticky. But I think, when we look at surveys, firms in the service sector, your likes of your restaurants, your cafes, why were they raising prices so aggressively? Partly, again, that was down to higher energy prices. And I think with a bit of a lag, that pressure is coming off, and that should start to show through over coming months.
Will the UK avoid a recession? Is a soft landing possible?
It's a good question. The Bank of England itself is basically forecasting stagnation. That's more or less what we're forecasting as well. And you've got to balance out a few things. I mean, on the one hand, as I mentioned, interest rates are only just starting to really hit. So consumers are getting hit more and more over coming quarters. Businesses are starting to feel the pinch as well. And we are starting to see the impact on the jobs market. Unemployment is starting to climb. Vacancies are coming lower. So that's going to have a bit of an impact. But then on the flip side, if we look at real incomes, that story is getting better. Inflation should come down quite markedly, particularly for the key things we just talked about, energy and food, over coming months. Whereas wage growth seems to be proving more sticky. Private sector wage growth is 8%. It's going to take time to come down. So positive real wages, that's probably a good thing for the economy. Balance that all out, yeah, we're probably looking at weak growth, but maybe not a recession just yet.